Biden administration is literally handing the Trump team a bag of rocks for Christmas. There's $7 trillion of debt maturities in 2025. $7 trillion. That is double 2024. And
so when you're talking about some of these maturities, so you issue a note or a bond or even some of these bills, right, the Treasury, when they mature, you have to get your principal back, right? So in order to pay that debt, you have to issue new treasuries, and that's what I believe that's what he's referring to.
Nearly 4 times 2022. This is a gravely serious situation. Global bond yields today are breaking out Japan, the United States, and as interest rates go up, bond prices go down.
Okay, so what he's saying by that, and you gotta kind of be careful of the word yield sometimes. It could have a inverse, or it could have a double meaning sometimes, but mathematically it's always the same. So what he said so if you have a bond, right, you have it at 5%, and all of a sudden they start issuing bonds at 6%, well, the paper you hold, the bond you hold, is worth a little bit less, right, because you want to get that one at 6% as opposed to the one you hold at 5%, so you sell it at a discount, and that's what he's referring to.
To keep it very simple, there's a bond that was issued by Apple in 2020-21 that is now trading at 57 cents on the dollar. So you have to think of all the loans out there, all the commercial real estate, all the mortgages that were issued from 2017 to 2021, and those are all trading way down. So as interest rates go up, bond prices go down. It's a real bag of rocks for Team Trump.
Well, obviously, you're saying interest rates going up. Is that organic that they're going up, or is that because the Fed is going to have to raise rates to combat what many are starting to predict for 2025, which is at least sticky, if not a little bit higher inflation? And then you've got a very strong labor market, job market, which could become tight again. It's possible.
Okay,
yeah,
so what she just mentioned was very interesting. I'm going to be interested to see what he responds to that. So if you have a booming economy, the labor market tightens up. What that means is that employers are having a hard time finding candidates. What I predict is that when you start kicking out 4% of the population because they're here illegally, those labor markets are going to tighten up. When when you have deregulation, a lot of deregulation, and a lot of new businesses start, those labor markets are going to tighten up. What happens when they tighten up? Wages go up. Wages go up. When wages go up, the inflation goes up. But there is kind of an offset piece to this, is that when you lose, there's GDP per capita. And when you lose 4% of your population, if they're going to be kicked out of the country because they're here illegally, then also too there's an opportunity to kind of offset those forces, right, for when it comes to inflation. So we'll see how it develops.
Picture in your mind, we had the worst inflation shock in 30 years. So the Fed hiked rates, pretty violently over the last 2 years. But now we have this incoming Trump team and all those animal spirits. So because inflation is not, it's like the last scene in Terminator. Inflation's not really killed yet. It's still alive. And now you've got animal spirits and growth expectations rising. So all that's going to do, and that's what's happening now, that's reviving inflation expectations, and that's scaring bond yields higher.
What do you foresee as an investment strategy for 2000? 2025.
Well, this is an incredible year of opportunity because in years where our research shows, we've got research going back 30 years, in years where stocks are up a lot, the losers are exponentially sold more aggressively. And so you have some stocks in the natural gas space, for example, that are pretty depressed. Just look at Occidental Petroleum. You can buy that stock at a lower price as where Warren Buffett's been buying it over the last year and a half. And the natural gas space is going to power this artificial intelligence revolution. All the eyes are on the NVIDIAs of the world. The real opportunity is for year end, as we get this sell-off going into next year, is going to be buying the energy complex that's going to support artificial intelligence.
And some strategists are saying...
I totally agree. I recently did a video about a asset-rich economy, or asset-light economy, I should say, and in the video, one of the commentators talks about AI and how these growing companies need to produce their energy because it's a major liability, major cost to them. And in order to increase their bottom line, I think OpenAI was talking about buying a nuclear power plant. I think that was in the headline. So that's something to look at if listen. And I gotta say this because this is not investment advice, right? I'm a financial professional, so I have to say that. Other people don't have to say that, but I do, right? And if you hear somebody saying it's not investment advice and they're not a financial professional, they're not under the same rules as I am, right? They really don't have to say that. They don't know laws, but I have to. So, buying some of these buying into some of these power companies is definitely something to look at, because as some of these technology companies grow, they're definitely going to need more power, and you're seeing the demand for power increase.
You might want to add in wind and solar to that, because in particular on the side of the data centers, that those are going to need so much power, you're going to have to look at all energy sources. So it's going to be an interesting year. Larry McDonald. Larry, thank you for being here.
Thank you, Cheryl. And don't forget uranium, especially uranium and nuclear power.
It's a very...
Yeah, and I didn't know this, but I think uranium's the second... the second largest export we have in this country. I don't know everything till I know it, you know what I mean?